Hello investors. At this time we are going to look at a candlestick that you tend to find at the top of an uptrend. It can be found anywhere else, however you are looking for it at the top of an uptrend. Anywhere else it does not give you much value except for the top of an uptrend. So here we are saying the shooting star candle happens after there is a sustained move in the price in the upward direction. Now when you look at a shooting star, it looks like an inverted hammer. However, a shooting star is found at the top of an uptrend and an inverted hammer is found at the bottom of a downtrend. That's how you differentiate these types of candles. Now a shooting star has got a wick that extends to the top of the body of the candle. It is called a shooting star probably because if you ever saw a shooting star, it has a long tail which is on the upside, then it has a head which is on the downside. In other words, it is falling. Now, when you see a shooting star at the top of an uptrend, you have to consider the sentiment that the candle is telling you. In this case, the price would have opened and it would have continued way up in price. So it would seem like the bulls or the buyers are continuing to pull the price in an upwards direction. Then a lot of sellers come in and start selling, then they push the price downwards. In the case of a green shooting star, the price would have closed higher than the opening price. In the case of a red shooting star, the price would have closed lower than the opening price. So a red shooting star is considered to be a signal of downward momentum better than the green shooting star. But both at the top of an uptrend are treated as signaling potentially the same thing, that price is now turning and will start to go back downwards. If you had bought your shares, now might be the time for you to sell and keep the profits that you would have made when the share was going on its way up. Now the sentiment of the shooting star candle is that previously buyers were able to dominate sellers without much opposition. But here we start to see that the sellers are putting up a strong performance. In other words, they have pushed the buyers all the way from the top, going downwards. So like a shooting star, it's an indication to traders that things are about to go down. Now confirmation can be price that is trading below the body of the candle of the shooting star. So if you see it going towards below that, then you can know that it is time for you to exit that trade and keep your profit. If you are someone who is waiting to short sell the share, then you know that it is now time for an attractive entry with lower risk and higher potential of rewards. So you can open any chart and look for an upward trend and see if you can identify a shooting star from any of the chart patterns. You can change the chart from 5 minutes to 1 day to 1 hour to a week and see how it looks between the different time frames and whether a shooting star is short in any particular time. Then try to gauge what happened after the shooting star showed up in the price chart. Thank you. We are going to look at more candlestick formations, but the ones we'll look at next are not single candles, but it's going to be double candles that you have to read in conjunction with one another. Then later we'll look at 3 candle formations. In other words, you're looking at 3 candles that you need to consider as one and the psychology that is behind those candles. Thank you.